Hello, in this video we will be discussing trends and reversals. If a market has been moving higher or lower for a long time, we can say that it is following a trend. Trends exist in all financial markets and traders use them to their advantage. When these trends turn in the opposite direction, it is called a reversal. Why do trends exist? Trends bring some stability to the trading world by trying to make sense of price movements which may otherwise look completely random. Traders make assumptions as to why markets move in a certain direction. They match these assumptions with fundamental macro events, pattern recognition, and indicators. Types of trends. An uptrend is defined as a series of higher swing highs and higher swing lows. The swing highs are formed when the market moves upwards, breaking the previous market high structure, and then retraces lower. The highest price after moving down is called the swing high. Downtrends mark a series of successive lower swing lows and lower swing highs as everyone is accepting lower prices and the selling continues. Traders watch for swing patterns throughout the day and adjust their strategies accordingly. Difference between reversals and retracements. Retracements occur due to short-term profit taking and after a market has found levels where traders feel it may be a possible reversal point. Retracements are for shorter time frames and do not reflect the macroeconomic environment. Long-term trend reversals, on the other hand, change the market direction and follow macro events. Technical indicators help spot trend strength and direction. The Relative Strength Index serves as a technical momentum oscillator. It is primarily used to identify overbought or oversold conditions of an asset. Readings over 70 tend to indicate overbought conditions, whereas readings below 30 indicate oversold conditions. The Parabolic SAR indicator plots dots on charts to indicate reversal points in price movements. If the dots are placed below the price, traders interpret the signal as bullish. If the dots are placed above the price, traders interpret the signal as bearish.